It's an uneasy calm, an uncomfortable calm. These warnings from the IMF, and then I look at the screens. I look at the Bloomberg terminal, all-time highs on the S&P, on the Nasdaq. How do you feel personally about that disconnect at the moment?
Well, I think that there is a short-term look-through in the markets, especially the equity markets, as to the prospects of both the war ending quickly and exuberant spirits and investments and IPO calendar and deals. That's what keeps the stock market going. But in the background, humming slowly, are the long-term consequences potentially of what's going on in the Middle East. And, you know, both the inflationary risks it can create as well as the growth risks on the downside, which is what will give central banks, pause as to how they deal with this situation. I think some of the liquidity concerns we're seeing in credit, and not everybody in AI is going to be a winner. These are the things that are humming in the background.
Well, let's pick out a few of these themes. The deal flow, the IPOs we could see this year. We are potentially going to see not one, not two, but maybe three of the biggest IPOs we've ever seen in the history of financial markets in the US. Do you see the situation in the Middle East in any way, shape or form potentially upending the deal flow that we could see, the IPOs, through the year ahead?
Not in a structural sense, because it could affect timing. Do you go this week or do you go a month later? But the companies you're talking about, let's just take one of them, SpaceX. These are remarkable companies that have been built offering important real products to the global economy. And the capital that they will get from an IPO is meaningful.
How real is this progress? This is something I've really had to wrestle with over the last 6 months or so. When the Anthropic CEO comes out every other week and makes some dire warning about the future for white-collar work, and now we are all hearing about Mythos and banks needing to work with it because it could potentially be incredibly dangerous for the financial system. What's your understanding of what's on offer right now? Is it part of the IPO roadshow, just a marketing effort to boost valuations, or is it the real deal?
Yeah. So first of all, on the first part of your question about the impact on workforce, I think it's really important for the large corporate employers like us to be very responsible in the way in which we use AI, both in terms of it's going to offer deeply personalized services, but they need to be using proper data and offering proper products to customers. And then the second thing is it's not just about efficiency, it's also about innovation. And we need to reskill our workers to make sure that they offer better products and better service going forward. That's one side. The second thing is the pace of change with AI and the capabilities that it's showing are really quite remarkable. So we've got to take every conversation seriously, including the Mythos one. And we have to assess what the impact of it is, and we have to assess how we can protect ourselves. So we have to take it seriously.
At this point, can you give a return on investment tied to the deployment of artificial intelligence throughout your ranks? Or is that going to be a sticking point with ongoing investment at the pace that we have seen in some of the big tech companies?
It's a very important question, Lisa. And I think from the corporate side, I think, A, we have to adopt it. B, we have to invest in the infrastructure that allows us to adopt it at scale. And C, and this is the hardest part, we have to generate true end-to-end use cases that are high value, that take an old workflow and make it into a new workflow. That's going to be the hardest part. I believe value will come. I believe this is a great and deep technology. And we're going to do it from the point of what is needed and effective. But I think trying to put an ROI on any individual project is a bit of a fool's errand.
Which is part of the reason why people are derating some of the big tech names that are investing so heavily, because they can't prove that. A lot of people say the reason why markets are doing so well is because of how much liquidity there is in the market. And one big source of that liquidity has been money from the Middle East. Yeah. How much is that going to pose a problem going forward, given the fact that this area needs to rebuild and invest in itself in a different kind of way going forward?
Yeah, and I think the Middle East and Middle Eastern countries are obviously going to have a reconstruction bill at the end of this. But they're also going to have to rethink their defense systems, right, for decades in the future. And so you would imagine that some of the investment would be inward. But by the way, that's been happening for many years in the Middle East as they've been looking to de-risk themselves from oil dependence. Now, oil prices have gone up recently. But they're looking to broaden and diversify their economies. The UAE has done it. Saudi Arabia is looking to do it. So there has been more inward investment in the past few years than there used to be.
But now, do they offer a safe place for businesses to actually go there and offer this diversification thereafter?
Well, I think the attractiveness of the UAE, the strength of the Saudi economy, will continue to be strong. And I think investors will appraise those risks that are happening now, but I think the sooner this war comes to an end, the easier that statement is to make.
Are all your plans that you had before the war for the kingdom and the Gulf writ large still in place? Like, are you still looking for that private banking license in the kingdom?
Yes, we absolutely are looking for a general banking license in the kingdom, and we're opening our regional headquarters there later this year. Those plans are in place, and we remain as committed as ever to the Middle East.
Can we finish on Europe and how things have changed? I've often been accused of being anti-European. I certainly don't feel that way. I feel very pro-European. I have not been very pro-European policy over the last decade. There's clear and evident mistakes that have been made by leaders across the continent. Do you see a change taking place on the continent and in the UK, a change in policy that would benefit the economy?
Yeah, well, I certainly see it in the UK, about which I can speak a little more knowingly. I think the UK economy, this morning they had a very strong GDP print, and if March is flat, it's going to be a 0.7% quarter, the first quarter, which is quite strong, right? And on the better side of things, gilts are now in the middle of a range of trading, but the UK continues to be business friendly, invest in its economy in both the financial sector, technology, and biotech, is looking to diversify its energy dependence. I mean, it's going back to some more usage of oil and natural gas from the North Sea. And I think the UK continues to be an open economy trading with the rest of the world. Europe, on the other hand, has more to do in creating a more perfect union, if we can use the Washington term, in terms of certainly its capital markets, its banking system, and trade. So I think more to do in Europe. I'm pretty optimistic on the UK.